Welcome back to another episode. Today, I want to take a closer look at AEHR test system. For those that are not familiar, AEHR provides a lot of great semiconductor equipment used for wafer level burn-in test systems. So it's pretty much a form of a stress test. And one of their biggest market opportunities, or one of their biggest revenue growth opportunities right now, is the automotive space. Unfortunately, the automotive space, especially in things like EV vehicles, is seeing a bit of a slowdown due to numerous macroeconomics. And the company, unfortunately, gave us some preliminary results earlier today that caused the stock to be down almost 25% in one day, currently sitting at $11 with a market cap of $317 million. So in today's episode, what I want to do is take a closer look at the preliminary results, see how they differ from their previous guidance that they gave us in their last earnings, and also just my overall thoughts in this market. And just fast forward, I may say that the automotive space in the semiconductor market is one that has a lot of opportunities right now because of price reactions like this. Let's take a closer look in today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for their subscription service. Now, let's continue with today's episode.
All right, so just a quick look at price action. Like I mentioned, the stock is down roughly 24%. Year to date, the stock is down nearly 55%. And in the past year, the stock is down roughly 70%. I mean, from its 52-week peak, the stock is down over 79%. And one of the biggest things affecting this overall stock is first, there was a nice hype in AEHR test system about a year ago. And that hype was all driven by the kind of growth opportunity seeing in the EV space. So the EV market, the automotive market, was kind of helping this company see a huge boom, and there was a lot of excitement for the stock. I believe the price to sales ratio of this company and PE ratio were sitting at extremely high values. Now that kind of excitement has died down a lot. Like I mentioned, right, we're seeing from a lot of vehicle companies out there that, hey, right now, especially in the EV market, there is a slowdown in purchasing and there's kind of an inventory buildup. So that is causing equipment needed for certain testing of some of those semiconductor solutions to also be impacted. And that's where AEHR test system is kind of seeing this weakness. I personally believe that the semiconductor is very cyclical, and the cyclicality does give us buying opportunities. Unfortunately, the cyclicality, it's not always perfect to time the bottom, and I don't think you can never time the bottom in any market in general. But when we start to see things like this where there's huge down prices, and we're going to look at valuations in a bit, when valuations don't seem that crazy in forms of forward PE ratio, this to me is more of accumulation phase where you buy a little bit here and there, where I buy here a little bit here and there to try to build up an opportunity to ride that wave up once we start to see an improvement in the overall market. Because in the long term, we are going to continue to see growth in EVs and EV infrastructure in other markets that AEHR test system hits as well. So short term bearish and more of dollar cost average time frame for me. Long term, it does seem like this is a great opportunity for multi-year investment. Before we go any further, I just want to say thank you all for the amazing support we are getting in this channel. We're closing into 40,000 subs. That is insane. So if you haven't and you are enjoying the content, make sure to hit the thumbs up and the subscribe button. Finally, if you want to support this channel a little bit more, check out my special offer at fool.com/Jose. Now back to today's episode. So if we take a closer look on March 25th, AEHR Test kind of gave us an update for their full year revenue guidance and also a preliminary for their third quarter results. So unfortunately right now, because delays in wafer level burn-in test system orders for semiconductor devices used in electrical vehicles, that delays have created a short-term gap in revenue and profitability. And because of that, they're also updating their guidance for the full fiscal year of ending May 31st of 2024. So pretty much what I was just talking about, right? The overall kind of over inventory cycle that we're seeing in the automotive space is creating a form of slowdown for their systems in the short amount of time. Now, if we take a closer closer look at their full year guidance, is roughly this is kind of a double whammy because during their last earnings, which were on January 9th of 2024, less than 3 months ago, I believe, the company already had downsided their guidance. Their guidance previously was at $100 million before that earnings, and after that earnings, they dropped it to roughly 75 to 85 million, and now with these preliminary results, they're dropping it to even 65. So one of the big worries here is, hey, Jose, how much worse can it get? And the answer is it could continue to get worse and worse, and we can continue to see preliminary results from here. And that's why I mentioned at the beginning of this episode that I personally believe in the semiconductor market, when we start to see these kind of heavy crashes in stock prices, is when we have a nice dollar cost averaging, even though there might still be a little bit more pain in the way. And that's just how I do it. Maybe there might be others that would rather wait for the stock price to have recovered a nice amount, but a lot of the risk be eliminated because maybe we're starting to see a turnaround in the market. So the CEO does mention that discussed very similar to discussed in the second quarter earnings, they had seen several pushouts of forecast orders driven by both current and new customers that impacted their overall revenue for the full year. And they see the softness in the overall semiconductor capital, mainly in automotive applications. One thing, though, that they did mention that was kind of new, and I do believe this is the main reason the stock price took a huge hit, is in the previous earnings, we did see that for solutions that dealt with the silicon carbide system, they were still kind of strong last quarter. But they mentioned that until the last 2 weeks of the quarter, they started to see delays in orders for silicon carbide system, with customers requesting their ship dates within the quarter, as well as a last minute pushed out by customers of a system in their backlog. So until this time, they had been hearing from those customers that their silicon carbide based capital investments were not being impacted. So this was the big unknown that hit Airtest system, and the main reason the stock took quite a hit, because previously the silicon carbide was okay to some extent, and now we're getting reports that is not okay at the moment. Regardless, even with this, they do still expect to finish the year with near or above record annual revenue for the year. And despite what they believe is very temporary delays in current and new customer orders, they believe that Air will experience significant order revenue and earning growth from these market opportunities in the future, because their test systems are crucial for things like the worldwide electrification infrastructure, for battery and electric vehicles, for data and telecommunications and data storage, machine learning and artificial intelligence processors, and communication chips, and with the large and growing semiconductor memory market as well. So in the short term, we're seeing a lot of dependency and a lot of weakness in the automotive space, where this company focuses a lot of its revenue. But in the future, like we saw this, the EV market is not going anywhere. We still have to build out EV infrastructure. So in the long-term system, this, in my opinion, could be completely wrong, looks like those buying opportunities where you dollar cost average over time. So for Airtest systems, the two main markets right now are the automotive market in the silicon carbide market, which right in the automotive market, you have numerous transitions happening, not just in the silicon carbide space and not just in EV vehicles. So that's why when you talk about them, they're two separate markets. The company is also very excited about the potential of their new silicon photonic optical input output or co-packaged optics market, where they have kind of a burn-in-assist system for there. And for those that are not familiar, these kind of optical chip solutions are used for the communications of chip to chip. We've heard it from companies like NVIDIA, like Intel, like AMD, TSMC, and Global Foundries. So this is another growing opportunity for them, and this is one that can grow dramatically, especially as we need those chip to chip communications to be a lot better. So this is a small market opportunity, but something that can also help out in the future, as we have all those other tailwinds that I mentioned before. I mean, we saw on March 1st that the company announced shipment of their new high power configure system for wafer level burn-in and stabilization of next generation silicon photonics integrated systems. So we can see that evidence that there is a nice opportunity in this market right now, as multiple companies, like the ones I mentioned before, have announced product roadmaps for devices using optical chip to chip communication. Now, we did see some news on February 21st that the company was receiving a nice order of follow up on silicon carbide burn in test and burn in devices. And that's why, until just a few weeks ago, the company mentions that they were seeing pretty strongness in this silicon carbide market, but now they're starting to see the weakness in this space as well. And like I mentioned, that is why I believe the stock took the biggest hit, because that silicon carbide market was expected to be very, very strong, but now it seems like there's weakness in it. Now, I do want to say there are a few companies to kind of keep a closer eye out that are dealing with the automotive space, that are dealing with silicon carbide to some extent. And those are ones that maybe you might want to also keep a closer eye on your overall portfolio or watch list. The first one is going to be on Semiconductor, ticker ON. The other one is going to be Indie Semiconductor, which also focuses in the automotive space, ticker INDI. Next, we do have Mobile Eye. Mobile Eye does, while most of them are form of autonomous driving to some extent, the reduction and the slowdown in the car market can obviously impact Mobile Eye in the future. And finally, the other stock that could kind of see some weakness here is Tesla, right? If we are seeing kind of a slowdown in the EV space, one of the biggest players in this space is Tesla. So they can obviously see some of the impact in forms of consumer spending, in forms of automotive devices. So I just wanted to bring up this to attention. Like I mentioned, I am a shareholder of Air Test System. I am a shareholder of Tesla and Mobile Eye. And the main reason is because I believe that right now we are seeing that huge weakness in the EV space and in the automotive space. And we might continue to see that weakness in the next few quarters as well. So we might continue to see stock prices decline, but I don't mind dollar cost averaging over time and building up a nice hefty position for when we do see this turnaround. Because like I mentioned, EV is not going anywhere. EV infrastructure is not going anywhere. The need for semiconductor solutions in automotive companies is not going anywhere. So in the long term, I do believe there's a great buying opportunity for a lot of these companies. But I could be completely wrong, and these are just my overall thoughts. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.